Hello everyone, this week we are looking at the STI chart on the daily. So what I've done is that I have drawn the trend channel from this low here to this low, and then the parallel line up to this high of this bar here, and you can see that price has traveled very nicely along the trend channel, and then we have broken here, we came back up, and then we have a breakdown. And on the chart also, I have also marked the downtrend line from this high to this high here, and you can also see that when the price came back down to the demand line of the trend channel, and we are seeing a hugging of the demand line towards the supply line and coincides, and we see price has been rejected, and now price has been coming back down. So on the overall price structure, what we are seeing here is that STI has really moved down, but it has not made a very significant down move on this side here, and what we are seeing is a up move, which are almost negating this down move. Volume is also increasing, and we are also seeing that some demand is coming to the demand wave here. However, on this up move, what we are seeing here is that the shortening of a demand wave, which is this length here compared to this length. This is a shorter one, and what we are seeing also on the supply wave, which is the down wave here, is that it is slightly lengthening itself. So according to Wyckoff, was one of the observation of a change in trend is that when during the uptrend, when we see a shortening of the demand wave and the lengthening of a supply wave, or lengthening of a supply wave, we would have to expect that it probably be a trend change. This is a very immediate, very short term, which is only about 1 month and probably 1.5 months to come. And while we are seeing a uptrend in 1 month, and then now we are probably seeing a change of the 1 month uptrend. As we can see that when we broke the demand line here, it is one of another sign that to tell us that there might be a change. Either STI might just go into a trading range, or it might turn down to come back to test this low, which has not been tested yet. So we might have to expect that to happen. On the bar by bar analysis, what we are seeing is that we have a down move, and then we have this breakdown of this demand line, and but we saw some demand came in as the volume increased when price just dipped down and rallies back up into the trend channel. So there is some demand that is happening here. And then on the next bar, what we are seeing is that there's a slightly low volume, and we are comparing this volume with the rest of the few bars in the background where we saw the down move. This is a very low volume as compared to all this down volume on this down move here. So therefore we can suggest that this supply may have probably been exhausted at this level. However, if we compare this volume back to more to the background, this volume is not a small volume, so it's probably average to a bit high. So therefore, although supply may have exhausted on this down move, but there is still excess supply that is probably happening along here that is still not been taken out. Then on the following bars, we have seen a up move, but the up move was more lethargic in the sense that it is not able to make any significant move up with a gradual increase in volume. So that is also a sign of supply has already been entering the market, and on these 3 bars here, and especially on this bar when we see a close below the close of the previous bar, while price was able to dip up above the high, but wasn't able to hold it, and then sellers to step in and move the price down and close below the close of the previous bar, and it was done on the increase in volume. So that is a telltale sign that supply has already been entering the market as early as on this bar here. So what we are expecting from this is that might be a reaction coming. The natural reaction that will come to test the level would be the low of this bar here, which we saw on the next bar where we have a very huge gap down, and then we dip below, almost coming to the low, but wasn't able to make any lower low. Then we close off the high. So that shows that some demand that's happening here, and the volume was extremely high, not really extremely high as compared to this few volumes here, but it's already considered high as we compare to the volume that is coming down on this down move here. So is relatively is very high on this down bar here. What we are seeing here is that we have a very huge gap down, and this gap down might be so serious that we may not be able to close this gap quite easily on the next few bars to come, as we also been seeing an evidence of non-ability to close the gap. And on this last bar here, we have a very narrow spread, but the volume was quite high, and this was on the up bar, and this is not a good sign for any bullish behavior in the future, because it just simply tell us that there is still a lot of selling going on in the market, while market was able to hold the low, but the selling may probably prove to be a bit high or a bit too much for the demand to hold. We want to see the next few bars to be a down bar with low volume. That will be a very good sign for the bulls, that it might just signify that the selling that is happening on these two bars here may have already been exhausted. Then there might be a chance for STI to rally back to the supply line, and hopefully is strong enough with volume to break the supply line and stay above it, and hopefully to come back to test the 2900 level. Else, if we see more volume that come into the market, but we do not see any upside movement on the STI, then we might have to be very careful, because STI might just enter another very tight trading range for probably a slightly longer trading range, between a very tight range around here. Or there might be a chance that STI might break this low, which is the 2754 level. We might break this low with a high volume. If that happens, then the natural level to expect would be below the 2700 level, or at this low here. And once this is also broken with a high volume, then we have to expect STI to have a more downside to come. The rally back up here into the UT area is not also a very good show of demand, because of the sudden increase in volume on the up bars. So it might just be a bit climatic on this up move here. And we also fail on the UT level here, so that is not a very good sign at this level. So combining all the weakness that is coming in at this level here, which is also looking at the down move, and the up move is very lethargic here, and then now we have an increase in volume on the downside, all combined will have a more negative impact on the STI for the next week to come. I'm not expecting STI to probably break this 27 level in the early week, but probably in the later week, if our volume is going to accumulate higher on the down bars, I think we might be seeing a break of this 2754 level on the later week. So we have to be very careful. If we have already got into a position of going long for STI, we have to watch out for weakness, and probably tighten your stop once weakness has shown itself. Tighten your stop to the natural low or the logical low for a stop, or just close it into the market price to let the market take you up. So that I will probably be consider if I have a long position now. So that is my take for STI for this week. I hope this video is useful to you, to give you some ideas of how to trade the direction of STI, and also make some logical judgment from the price action and volume. And I will hope to see you next week. Thanks for watching.